For our hot pick section today, we wanted to focus on some stocks that might be worth your attention in the sector. So we wanted to turn to Michael Pachter, who has been covering the worlds of technology and entertainment for years. He is managing director of equity research at Wedbush Securities. Michael, it's great to see you. And obviously, it's an interesting time in the markets. But at the end of the day, there are businesses that are constantly building and going where the puck is going. Within this sector, this universe that you cover, what are you looking for in a company?
You know, I think the best companies are the ones that monetize the greatest number of their customer base. And as you know, mobile games are largely free to play. So the guys who have figured out how to monetize a greater number of users are the ones who are going to win. So that kind of leads to my top picks in the sector.
Okay. Well, I want to go through three names in particular as I reference. I wanted to start with a company called AppLovin, which anybody who's been watching the markets closely the last couple of years saw that rocket ship ride for this company that works very closely with the industry. What is it about the business, outside of, the ups and downs of the stock itself, that really is at the core of why you like it?
You know, it's easily the most complicated company I've ever covered. And by complicated, I mean almost no one understands what they do.
Okay.
I'm fortunate. Well, I'm serious. They deliver ads in mobile games, but nobody understands how and exactly what their competitive advantage is. They're really good at figuring out what an ad viewer is doing and is going to do in the future. So they have a predictive algorithm that can tell you if the person who's viewing the ad is likely to download the game they're looking at and spend money in the game. And they've proven it out. So they're capturing massive share. And the part that people don't understand is they think that sector of the market delivering ads in mobile games is static. It is not. It's growing. And the dominant player used to be Facebook, of all people. Facebook is hemorrhaging market share, and AppLovin is just soaking that up. So AppLovin's been growing at a ridiculous rate, 60, 70% a year, based on capturing share from Facebook. And the companies that dedicate ad inventory in their games or who purchase inventory have figured out that AppLovin gives them a higher return. So AppLovin is just crushing everyone in the sector. Bunch of short reports out there, all misguided. It's kind of remarkable how badly reasoned the short reports are, and there have been 4 or 5 of them now. Just terrible. Again, people who don't get the sector, who don't understand the company, so they're finding kind of silly things to criticize.
All right, helpful context there. Let's talk about Roblox, which maybe is an easier story to understand if you're a game player or you have kids that play games. And I remember my kids were playing a lot of Roblox-related games in the pandemic, and then it cooled off, but they're back at it again. What is it about Roblox that you like?
They're a true platform, and by platform, think iOS as a platform or think Android as a platform. Apple doesn't care what games you play as long as you play games on your phone and they collect their 30%. Roblox is kind of the same way. They don't actually make games. They just host them. Other people make the games, and Roblox captures closer to 70% revenue share from the games on its platform. So number one, they've got a massive competitive advantage. No one else other than the phone operating system guys have figured this out. Second, they're really enlightened as a management team. They have highlighted for the last couple of years that 80% of the hours spent on Roblox don't monetize at all. So they're intent upon capturing, that 80% through advertising, which I think is brilliant. Television has advertising. We don't pay for it, but we suck up and watch ads in order for you guys to get paid. And Roblox has figured out they should be emulating what's been going on in the broadcast world forever. I think that's an easy double to their revenue in the next couple of years. So I like the story a lot.
Interesting, helpful context there. And then the other name that you brought to our attention today, Playtika. Tell us a little bit more about that business.
You know, it's a Israeli company. It's been around a long time, 15 years or so, and it's been owned 3 or 4 different times. It's currently 60% owned by a Chinese company called Giant Interactive. They've been under pressure to get rid of their holdings. Stock was close to 30 when they started selling. It's down now below 5, and it pays a 40-cent dividend, so 8% yield that is secure. The dividend's about 150 million a year. The company, I think the worst year in the last 5, they generated 288 million in free cash flow. They're really positioned to generate more like 600 or 700 million in free cash flow. So you're going to get an 8% dividend while you wait for something to work. In fact, they have a lot of their ducks lined up right now. They just bought a company in November that's going to take their revenue very likely 15 to 20% higher and take their profitability very likely 20 or 30% higher. So I love how they're positioned. You're getting paid to wait. You're not going to have to wait more than about a year for a double.
Okay. Really appreciate it, Michael. Thanks very much for walking us through all 3 of those.